Please. All right, folks. So here's where we're at right now. So what I'm doing this week is I'm going to kind of go over a couple different programs that I think could give you guys tools to kind of speak to somebody about, hey, I don't have enough money for my, either a renter or someone who's a previous homeowner who just thinks I got to save this abundance of cash to buy a house. And we all know that not to be the case, but sometimes it's what do we have to give them to maybe get them to get on the phone or get in a car with you? So what I'm going to do is share my screen and boop. Lauren, do you see the Bay Capital thing here? Okay. All right. So what I'm starting with first is our family home ownership program. For anyone who used us or worked with us before, we did have this as a option about a year ago. The problem was this program had some strict debt ratios. It was like a 31 housing, 41 total percent. And for first-time home buyers, sometimes it's just really tough trying to get them into a home. And when they got student loan debt, or they're not really where they need to be in their careers, right? So tight debt ratio programs really sometimes are an issue. So what we got lucky with about a month ago, and I wasn't really quite sure how this would play out for us, is we were able to they upped their debt ratio to just a 45% max total, right? So to get into it a little bit, why this program I think is a good option. For starters, no mortgage insurance. Okay, so unlike FHA or even USDA, which you'll see in a little bit, I did a comparison breakdown. You always have that monthly MI, which kind of factors into your payment. Competitive rates can be questionable. I'm going to be honest with you guys. This is a flyer that goes out, but I always like to be more honest. You're going to find that this rate's a little bit higher than a USDA or an FHA or something like that because it's not a government program, right? So usually government rates are always better than conforming. This follows more the conforming guideline. What also is important is you do not have to be a first-time home buyer, right? So unlike some programs and things of that nature, you do, and this one you don't. They do require home buyer education. Now I guess where you could say this is a positive compared to like a 3% home ready or something, you can get 4% closing help. Okay, so in a market in today's world, that's pretty important. And also it goes down to a 620 credit score. Okay, where most conventional products, you go below 680, you're kind of pulling the brakes on conventional. Just between the mortgage insurance and the interest rate, it's just not going to be attractive for anybody. Okay. So, and what's most important is if you scroll over here, you see income limits apply. So we're going to go to that now. So here's how this program works. It kind of takes the income and gives you the 80% rule, which you see over here, right? So in counties of like Anne Arundel County, anybody making over $92,880, this program's probably not going to work for you, right? So this is not, like I say, my wife used to sell leggings and they had those one size fits all. Nah, that ain't going to be this program, right? So, but and I'll get to in a second, depending, can we talk them coming into Calvert? Just like something we do with USDA sometimes, Calvert County has higher income than Anne Arundel County. So, or like when we're dealing with a veteran, you have more eligibility in Calvert than you do Anne Arundel. So are they okay maybe going into North Beach if they were looking down in Deal or Tracy's area? So it's something that on every single client that we get from you guys, we're always dissecting all these programs. I know some people always just think, well, FHA, USDA. No, there's so many more. But I got to pull that information from your customer first, really dive into, is this even if I'm talking to someone who's making $150,000 a year and they're looking in, I don't know, Deal, Churchton, Edgewater, and Annapolis, we're not even talking this program, right? It's almost like process of elimination. We ask questions to find out what programs should even be discussed. So I'm not overwhelming them with information that's not useful. Okay. So here's just a list. And again, we're going to send this out afterwards. So if anybody wants to snip it or anything like that, I'll just send it to you in the email. So you just kind of have it for a cheat sheet. All right. So what I did next is I wanted to show you, I just showed you those income limits. But if you buy in a low to moderate area, there is no income limit. So the example I gave you is right here. You see Glen Burnie, this address in Glen Burnie, where I had a client looking who I thought had to go FHA. They were looking into 21061 income. This is considered moderate. Because it's moderate, even though they make more than the 92,000 that I showed you before, that is waived. Now, where it gets tricky is you can only do 100% financing up to $250,000. This house that I'm showing you was actually listed for 260. So what they require is 5% of the difference. So in theory, these people now who are thinking FHA, $9,000 down, could use this program if they bought this house with the program I just discussed with $500 down. That's their down payment. Okay. So big difference. Now, the problem is if you look at this over here, I go to 21060. Okay. Middle. So where I'm having a struggle is these people didn't really like their 21061 house, right? Because I guess schools, whatever it was. They keep sending me listings now from 21060 in Glen Burnie, but that's middle. They don't meet the requirement anymore because it's not moderate or low to moderate. So you got to be in a census tract that is low, moderate, or moderate in order to qualify without the income. So this is going to be a little bit more work on our end, but last night even they sent me another property in 60. And I'm trying to tell them that if you want to use this program, you got to get comfortable with 21061. Like it seems, and again, I'm not saying all of that area. So in theory, if this is a person that a couple homeowner that we think could need it or thinks or knows needs this program, what we're going to have to do is you're going to send me listings before you show them houses. And then what I'm going to do is I'm going to go real quick and be like, it works, it doesn't work. It works, it doesn't work. So it saves you time and then time, because if this is the program now they seem focused on, we don't want to show them property in 21060 then, because it's going to waste their time and your time, right? So let me make sure I'm not wasting your time and we're showing them homes that they can afford. Now, the good news is they could afford more. They just like the sound of $500, $1,000 down, right? Who doesn't? But they want to be in the school district of 60. So they want the benefit of the program that works in the other part, the northern part, closer to Baltimore, Glen Burnie, but they want the southern part of Glen Burnie school district. Ain't gonna work. So again, this is something that the team and I will be doing if you can give us a list ahead of time. And once we've identified somebody who is probably a candidate for this based on their assets, right? But one of the first several questions usually we're going through is, are you a veteran? Are you, what do you want to pay per month? What cash do you have? All those things are starting to pull in together a couple programs that I think will work for them so they can buy a house. Okay. So, and what's important to know about this is, and again, I will put this out. I did not have this at the time I created this thing. In Anne Arundel County, if you look right, does it say it? It does not say it on this part. It's on the other part I did not copy. So in Anne Arundel County, we're considered Baltimore region, which means if you are above the income, you don't meet the LMI income requirements, which is low to moderate income, then the cap on this is like a $390,000 loan. Okay. They will not go above 390 in Anne Arundel County, which if you go Calvert County or PG County, if you can find an area that's low to moderate, it goes up to 581,000. Again, remember, you're still making a 5% difference from 250 to 580. So does it make sense? Maybe not, because that's going to be a decent amount of money down. Okay. And plus, if you're in Calvert, depending on where your income is, you may want to consider this to USDA, right? Which one is better? So again, this isn't like a, hey, Rick, that we want to use this program. We're going to buy a $450,000 house. I got to look now. Does that make sense interest rate wise, down payment wise? And just like, I mean, there's times I have people all the time come to me with, hey, I don't want to do VA because I'm scared of the funding fee. And then by the time we break it all down, they're like, yeah, I'm going to do VA because it makes more sense. They had an opinion in their head that I don't want to pay this, but I'm going to put money down anyway. And they don't realize the funding fee's reduced. So it's our job to hear what they think they want to do and then show them other options that might be better for them. So moving forward, so I kind of did a comparison across the board here of like a 350 sales price, which I know that's good luck finding that sometimes, but just to kind of keep everything even, right? So what I wanted is, I started off with all the programs that I think can get you to 100% financing. So there's going to be 4 options: USDA, VA, BayCap 100, and FHA MMP. All right. So to start off, you can see the rate difference if you look right here. Like USDA, roughly 5.75, probably has a cost to it based on the recent shifts, but that's the rate I used. VA, very similar. The BayCap 100%, 6.375. So there is a gap difference here of about 0.625% in rate. But now let's start breaking down the pros and cons of each one of these programs. So USDA is going to charge that 1% fee, right? So up front, a USDA buyer is now paying $3,500. Okay, so if you're paying $3,500, that's a cost. BayCap fee doesn't have an upfront fee. VA 2.3% funding fee. And I'm using that as the low end, like they've never used it before. That's $8,000, no fee. So I was even thinking about this for some of my veterans. And again, of course, FHA has a fee, but I was also thinking about this for some of my veterans as well. And was thinking, what do we do in a case where maybe somebody's only been here for 2-3 months, whatever the case may be, or sorry, they're going to be in the home 2 to 3 years. In a market where we're not sure we're going to keep getting 3, 5, 6% appreciation. This is a program I might look at a little bit more and talk to them because, hey, now I don't have to roll this $8,000 fee, right? So is it more important to still go VA, get the better rate? If you look at the payment difference, $2,578, $2,484. So you're talking what, about $90 almost, call it difference. I'm doing the math right in my head. Difference in the payment, but you're talking $8,000 less in a fee. So is it something we need to consider when we're looking at this? I don't know. And you could see the difference is a little closer from here and here, 2578, 2547. So it's really hard to say what's going to be better or what isn't going to be better. So each customer is going to be different. The biggest one is sometimes I think people and a lot of our competitors out there that maybe don't have other options. Well, sometimes if you can't go USD, if you're not in the USDA market or whatever the case may be, they'll flock over to FHA MMP, right? So if you look at that, now you got a 6.75% rate, that's saying you use a 4% down payment help option. Here's your upfront fee. Again, no monthly fee here, $238. When we look at the difference, $2,862 to $2,578. Big difference in the payment. Now, the pro to FHA, and again, FHA and MMP, don't forget, also has income restrictions, right? So it's not like this is going to be, well, you can make $200,000 and do whatever you want. That's not going to be the case, okay? So I think when you're looking at this, in knowing that this is what our team is doing, if we're in a Southern Anne Arundel, Calvert County market, depending on someone's income, veteran or no veteran, we have a couple different options that I'm going to talk to them about. And if they're looking in Northern Anne Arundel because they're trying to stay out of Baltimore, now I'm going to go back to that 260, 261 and go, do you have kids? What would pull you away from using this program? Right now, the biggest thing is the school. That is the biggest thing that for that one couple who has a kid who's in high school, they're more concerned about, they don't know if that's where they want him to go for the next 3 to 4 years. Understandable. So this isn't going to work for everybody. So the main thing is, how do we overcome objections? So again, and here's just kind of the notes that I just spoke about before. And again, the 5%, right? That's 5% of the difference. So if you look at this scenario here that I gave, if somebody was buying in Glen Burnie 21061, right? So they could use this program, they make $100 and some $1,000, but they want to buy 350, right? So the difference is $100,000 difference, but because you're bringing 5%, you only need $5,000 down, right? If you do that same scenario with like an FHA, you're going to be like 13,000 down. So that's a huge difference in someone's out of pocket, and you can get 4% help from the seller. So across the board, if we can, I think this just goes back to like when I used to talk to people when, you know, they were looking maybe in, I don't know, let's call it Arnold or whatever area. I would talk to them about going across the Bay Bridge and using USDA, right? We don't have money down. And that's back when MMP was just, I guess, not as popular as it was with agents. So no one wanted to accept their offers. So it's like we tried to find ways around their objection. Their objection was down payment, right? I don't have the money saved up. I'm going to wait. You know, and the thing right now, like I spoke to someone last night, is if you wait to save a couple grand and we just get 3% appreciation, that $300,000 house is now worth 309 by the time it took you to save a couple grand. So you've lost, you're going backwards. So if we can find a program, get you in now, you can always refi later. We can, and again, what's probably going to happen very soon, unfortunately, is going to be when the market starts to really pick up. I'm already hearing from, I mean, we lost someone, one of my clients lost a couple of days ago. There was 8 offers on a property that went live on a Friday, and they made a decision by Monday. So we're already starting to see some markets are more hotter than others. Some sales prices are more hotter than others. So, but the longer I feel this people wait, unfortunately, I feel like the more competition's going to come in. Yes, there'll be more listings, but there's going to be more buyers. And if we have someone who's looking at closing help, what I am trying to speak to our clients now, if they listen, is this might be your best chance to get help, because the more competition that you're going to have, the tougher it's going to be. Okay. So just as a quick recap over all of this right now, again, the 100% program, you know, if I go back to the income, again, this is not going to work for everybody. However, it's for first-time home buyers. I would say, depending on the age group, it's going to work for a decent amount of people. The thing is, though, remember, if you meet the load, if you're under the 92,000, it's 100%. There is no cap as long as you're below a 45% debt ratio. Okay. So as long as I can keep you below a 45, and if you do the math, that's what, about 7,600, which means you're going to probably be able to get a home in the low 300s, roughly, probably, depending on your debt, maybe mid 300s at 100% financing anywhere in the state of Maryland. Doesn't matter. Well, let me take it back. As long as you're in this 92,000, which for most of us, we're in Anne Arundel, Baltimore, Queen Anne's. If you're jumping over to PG County, you go up to 113,000. If you're in Calvert County, you're going up to 113. A lot of you sometimes have people that shift into Howard. Again, Baltimore region, 92. So for most of where I would say our footprint is and where we're doing business, anyone making under this amount of money, you're looking in probably mid to low 300s, 100% financing, 4% closing help. You don't have to go through Maryland Mortgage Program. You don't have to worry about, is this a USDA approved area? You're done. Just look at Edgewater, for example. You have parts of Edgewater that is USDA approved and part of Edgewater that's not USDA approved. That's very confusing, right? Especially when a client doesn't understand that across the street works, but on the other side of the street doesn't. And that's how, again, I guess you could say particular it is. And so for anybody like this, what I'm going to challenge all my realtors is give us the list before you go out, especially if they're falling in a USDA market, or maybe our 100% program works for them. give us the list, let us work, let us check it out real quick, and we'll give you the yeses and nos. And then we will even follow up with the buyers to let them know as well, these 3 work or these 2 work and these 2 don't. Do you still want to see them, knowing that you have to go through a different path, right? Just trying to work smarter, not harder. Again, like I said, I'm trying to keep these calls pretty short and sweet on the topic. Does anyone have, for the few of you that are on here, does anyone have any questions that they want? Maybe I spoke too fast, or you would like me to touch on something else about this program or a scenario? Anyone? Bueller? And then, what I will do is we will get this information that I put together. I'm going to send it out, which you see right now. We're also going to find a way to get the video out in case you want that again. If there's anything specific, like a special targeting you want to do or a marketing piece that you want to do to try to be more specific, please feel free to reach out. We can tailor this or take bits and pieces or dig in deeper to give you something else based on any video or content that you want to create. All right. So if no one has any questions, we're going to probably let you guys go on with your day.
Cool. Rick, I would love a video, because as you and I are working on some clients right now, this would be great to send over to them, as well as another potential buyer that I've got. So yeah, you can send this. That'd be awesome. Thank you.
Yep, not a problem. And like I said, it'll go out to everyone that got the list. So in case, if you want it, great, you'll have it. If you don't need it, you can store it away until another time. All right, guys. Well, I appreciate everyone jumping on real quick, and I hope you guys enjoy this rainy weather and have a productive weekend. Keep us busy. See you guys.